And if I cannot accept this value anymore, this new format of value anymore, I cannot accept value as a bank. And if I cannot accept value as a bank or money as a bank, I have a bit of a problem, of course. And that is, I think, we're seeing this now, the second wave of, like, I would say, fast follower adopters now. We're not in this laggers phase, so we're definitely in the fast follower phase right now.
Max, thanks so much for joining us this morning here in our studio. It's great meeting you.
Thank you. Thanks for having me.
All right, let's get started. But before we do, just briefly tell us who you are and what you do.
My name is Maximilian Ruf. I work at a company called Metaco, and my role in the company is global head of pre-sales. So essentially, I'm taking care of anything, if you think of, which is content related during the sales process, and which drives a solution in such a fragmented space still. Like, it's not after we had all these crypto use cases, the use cases now kind of like they're changing, and obviously regulation is coming into play. Our main customers are banks, so sometimes it's not the crypto use case we're bringing to our customers. It's more like a tokenized securities use case, and here it needs a lot of explanation, a lot of solutioning around before you can actually start going into production. And that's my role, more or less. And I'm managing a team, global team. We are placed in every continent in this world, talking literally around the globe every day.
Yeah, right. Okay, so can you please tell us a little bit about Metaco? What's Metaco's value proposition, and how does it differentiate itself in the market?
So Metaco's value proposition, the USPs are definitely security and compliance, future-proof compliance. So once a platform like ours, Harmonize, which is our main product, is implemented, you do not need to change it anymore. So essentially, you have something, what you call in software speak, platform as a service, on top of which you can build something. So essentially, it's not a vertical, fully integrated stack, a buy to use. It's more like buy to build. And you can use something like a best of breed approach towards technology. So you can really choose your parts. We're not forcing you into parts, because in our business, you need a couple of parts. It's not just our platform. It's also an AML software. It could be a trading software. And with our platform, you can really go into a best of breed solution. And what we're doing is custody tech for digital assets. So what does that mean? In digital assets, if you're doing custody, like a bank, back in the days, the old business model of a bank was to protect something, in a physical vault, somewhere in a cellar, or like what you know from the movies, what you kind of had to explode. What we are building is digital vaults.
Right.
We are building the technology. So we are not the custodian. Banks or financial institutions are the custodians. We are building the technology that they can actually secure it in the safest way and in the most compliant way with regulation. So the first step is protecting it, the security. The second step is always the oversight, the control layer. So we call it custody, control, connect. So Harmonize does all of that, because first of all, you need to protect something, but the most, let's say, secure way of protecting something is digging a hole and closing it, right? Putting guards around it. You cannot use anything in a hole where guards stand around. So you have to think of something like, oh, I need a door. But if I have a door to something, like, who's authorized to go into the door? So what we are also building is a very secure door with a very secure authorization mechanism. So who's allowed to go in, who's allowed to go out? And there's like a digital log, which is immutable for everybody who goes in and who goes out and who approved something or who rejected something. So you always know what was happening to my digital vault where my assets lying in.
So can you tell me a little bit more about how Harmonize protects the private user keys and just keeps the data safe and ensures that the authentication process only lets the right people into the digital vaults?
So what we are leveraging is not that we're not inventing the wheel. What we're doing is we're leveraging something what banks are using for 40 years approximately now. They're called hardware security modules, HSMs. So when you're going to withdraw money from a bank, the machine where you're taking the money out of, that's an HSM.
Yeah.
And we're using these things to protect the keys. But we have even a more elaborate mechanism. So we are not putting the keys on these HSMs. What we are even doing is we are just leaving a little master encryption key, if you will, so on the HSM. So to explain how we are protecting it, it's more a philosophy than actually one particular part of the system which is protecting it.
Right. Okay. That's really interesting. I like how you put it. It's more a philosophy that this gets implemented with technology. I think we've known for a while that famously it's very difficult for most people to open a wallet. There's a lot of processes, and the actual process is not yet seamless and particularly easy. So what is Metaco doing to facilitate the creation of wallet and the onboarding of the customers?
So what we are doing essentially for the fintechs of this world, and we are really building technology for fintechs. We're building technology for banks, highly regulated financial institutions, but definitely also for fintech. And what we are expecting the fintechs to do is to do what they did already for the last 10, 15 years, building the front ends for consumers or other businesses to have like ease of use. I would even call it going back to Web 2.0. We're putting the Web 3 or the DeFi web or this blockchain or DLT lab behind the curtain, and we're giving the fintech or the FI or the bank one single API connection to essentially access this whole world. And behind that API, you not only have security, you also have future-proof compliance. That's very important, because if you think of MiCA in Europe, there's a couple of things you have to fulfill. And with our platform, you can just build it into the platform. Why can you build it into the platform? Because you can program on top of the platform. And that's very important. So when you're talking about the usability of wallets, what we're expecting is actually wallets will just sit in the background. Like I wouldn't even recognize the wallet so much in the future anymore. Towards an extent, I would say what banks are currently building, that they are just treating it like a bank account. I probably could think of a world that they're exposing a public key to a customer like us, to an end user. So they say, this is your public key instead of your IBAN or like your identifier of your bank account. But perhaps not even that is being exposed. So does the end consumer in 2 years' time really see the wallets, really see all these cumbersome things, what we're seeing right now in Web3? Partly, yes, if she wants to dig deeper, and mostly no. They will just use it at the end.
Right. Can you tell me a little bit about the typical customer that Metaco works with?
Banks. We are a B2B business, and we're building technology for purely B2B to B or B2B to C businesses. And essentially, we really targeted for the tier 1 banks, more and more also the regional custodians, Africa, Latin, Asia, and that's our typical customer. But we actually also have corporates. We have an electronic vehicle manufacturer from Turkey, Tok. They call it the Tesla killer in Turkey. And they have built a utility token and an NFT. The NFT stands for the ownership of the car. So I'm buying the car, but when I'm buying the car, I'm actually buying the NFT first. And when I have the NFT, I can access the car. So and they are protecting the private keys to these NFTs and the private keys to the utility token, which is accessing the utility token, which is like kind of fueling the ecosystem through our platform, essentially. Like our platform takes care of the keys. So it's not only banks, it's not only FIs, it's not only fintechs, it's also corporates.
One thing I wanted to touch on is this idea of the long-term vision that your founder had. Because you're right, that's very counter what's happening in the market, right? Especially because banks at the very beginning were very much like crypto, digital assets. We don't want to do so. So really to bet on a future where banks will come around, I think it's quite courageous. My question to you is what are the challenges that you face in entering markets where still financial institutions are a bit hesitant to be in full adoption of digital assets?
Yeah, that's a very good question. At the end, I think there's something for everyone. I mean, I cannot speak about it. Obviously, we're under NDA here, but we're even working with North American banks these days, but not touching any crypto, obviously, not touching any public ledgers, public permissionless ledgers. That's very important to be said. It's in POC stages mostly, but you can always do a POC. You can always learn how your bank, and there's a lot to do inside of a bank to be digital asset, I would say, process compliant. To do all of these things, I mean, like a couple of our counterparts, they know what I'm talking about, and these guys have worked for 8 to 12 months sometimes to work out all the processes that need to change to adapt to this new world. And what I think, what is the game changer, and I think we heard it from Larry Fink from BlackRock, we heard it from a couple of other big bankers and asset managers in this world, that tokenized securities or tokenization is the killer app, if you will. So, but if you really look under the hood of tokenization, tokenized securities or crypto securities, what they're sometimes called, even the taxonomy is not yet there. So what I'm trying to get to is everybody has to learn that world. I think it comes no matter what. Yeah. And if you don't accept it, if you don't embrace it, you will be left out. It's a bit like, okay, if you didn't have an email account, you probably would have been left out by now. Yeah. So it's a bit like that. You need a wallet to receive and send and store value in the future. Yeah. And that is what everybody has to learn. So there's something to do for everyone, because CBDC will come, regulated stablecoins are coming, tokenized securities, as I said, are coming. They are already there, to be honest, and they're not coming. They're there. Stablecoins, they are also there. I mean, Societe Generale just launched their regulated stablecoin recently, and so it's all coming, right? And if I cannot accept this value anymore, this new format of value anymore, I cannot accept value as a bank. And if I cannot accept value as a bank or money as a bank, I have a bit of a problem, of course. And that is, I think, we're seeing this now, the second wave of, like, I would say, fast follower adopters now. We're not in this laggers phase, so we're definitely in the fast follower phase right now. And a typical bank implementation project reaches, I would say, that's very optimistic, 6 months to 12 months at the least, if not like 18 or 24 months to have it fully there to set up. Right.
I think this is really interesting from the perspective of value, capturing value, and banks need to recognize that value is changing, and tokenization of value, basically just diversifying value. What do you think the future looks like when basically anyone that holds value in a particular thing can create a token for it, and if there's enough uptake of that token, you all of a sudden has a new store of value? Do you think we'll continue towards divergence of endless possibilities of tokens that will capture value? Are we going to converge? What's your view on this?
Yeah, it's the everything turns into money hypothesis. I'm a big fan of it. I'm imagining, I saw a world before I joined Metaco. I helped the NFT platform. Obviously, it was in the hype phase, but I mingled with the people who built the crypto kittens on Ethereum, who built the Flow blockchain later. Dapper Labs, NBA Top Shots were actually tokenizing things that haven't been tokenized before, and they're worth a lot, Yes. And once if you have seen that world, you're not letting loose. Like, you're actually like down a rabbit hole. I would say that world was too hyped. It was too immature, probably driven by young minds who didn't really know how, if you will, the real world kind of operates to a certain extent, which I'm now currently, I changed to the complete opposite, right? Like I'm operating now with banks. They're very realistic. They're very, let's say, the compliance officer, quite important person in the bank. So everything needs to be solid, right? In a bank, right? You cannot do anything if it's not solid, if you have not figured it out to the very, let's say, bottom of it, until, for example, consensus mechanisms, very important topic for banks, finality of transaction. So what I'm trying to get to is everything turns into money. I think it will become a reality. And we're seeing this with Starbucks, with MasterCard, with Visa, everything there, doing PayPal, like all these money companies, if you will, some of them are fintech, some of them are traditional companies. Starbucks for me is also becoming a fintech with their loyalty system. Mm-hmm. If you can tokenize all of it, you can make money out of it. And then I can exchange, if I can with my Starbucks consumption buy my kid and in Fortnite a skin for Christmas. Yeah. Imagine that world. And it's technically possible, right? Right. It's technically possible. And Epic Games, the publisher of Fortnite, they are embracing this technology, right? And once they are changing the switch and they see some sort of value that they are like, interoperable, building interoperable worlds with Starbucks, for example, or I don't know, you told me before this interview, you're traveling a lot. If your miles can buy something for your kids or for your wife or for your fiance or whatever, you can make her happy with your consumption. Yes. Then sometimes, like, suddenly consumption can turn into something very positive in a way, and I can see that world definitely coming.
That's fascinating because I think tokens, we're familiar with them. As you mentioned, there's air miles, there's points for the supermarket, but this ability to transact across different platforms and ascribe like-to-like value of air miles versus money or air miles versus points at Starbucks, that's not something that we've seen before. And then opens up all sorts of possibilities. Right?
Absolutely. And if you see the neobanks, I remember a neobank from Germany, which launched their marketplace for these points and for these additional benefits and referral programs. And they really saw that as the future, let's say, revenue driver. I was really believing, okay, banks can also play a central role in that. So I need, at the end, it could also be Apple if you think about it. I think about the wallet app. I really like the wallet app. When my ticket is in the wallet app, my flight ticket, or, I went to the football stadium on Sunday and I put it in the wallet, I always feel safe. Imagine that wallet app is collecting all of these things, but it turns it into money for me. The next time I'm in one of one of the participant businesses, I can just, tap it. And I did something else somewhere else. And now I can suddenly pay for this little thing here.
Yeah.
What would I'm a UX guy. Like I build digital products a lot in my life, and I always thought about the user experience. Like when do I make somebody happy when using my application? And this interoperability makes people happy. Like it's not just closed system.
It makes me very excited just to hear about it. Okay. Last year it was Web3 crypto DLTs was all over the news. It was the only thing anyone could talk about. Then FTX happened, and then ChatGPT came on, and it's almost like everyone's forgotten about that this year. It's all talking about generative AI. What's been happening behind the curtains while everyone's now focused their attention on Gen AI?
It's a good point. I mean, like I see it in my LinkedIn feed a lot. A lot of people who were Web3 people suddenly are AI people. Personally, my take is I never really watched out too much for that. I think it's hype is hype. You cannot do anything about it. I think it has its benefit. It's clearly signaling something. It's definitely happening behind the scenes. Whoever is building is building. Whoever is committed is still committed, probably even more than before. I mean, like I've met people on my journey in the last 10 years, and I really come from early Bitcoin. I have to say I'm not a programmer. I'm not a computer scientist, so I didn't understand that part too much. Like I kind of worked myself into it. I come from philosophy and economics, and I see a lot of driven people in that space, and they won't change just because there's AI, And I have also my personal opinion about AI, whatever it is, but I think it's still happening, And there's always the smallest fraction of that space was the builders all the time, they're not just changing because something else is coming. Like they're quite committed, and a couple of them, you have to be so frank, they're pretty rich right now, so. Right. So they're not doing it for the money anymore. So
let's just close. Tell us a little bit what's Metaco's vision for the next 5 years.
It's definitely we're thinking that the world will re-centralize around a couple of hundreds, if not lower thousands, like the banks will kind of keep the value, store the value. To a certain extent, it's because it's balance sheet driven. Like these banks have sometimes trillions in balance sheet that just brings security to I would say a system. So we're really seeing a re-centralization around that. I don't think, and I personally, obviously, I'm a believer in self-custody. If you want to keep not your keys, not your coins, that still stays true. I think as you had probably cash under the pillow, or like the classical things we used to have back in the days, our grandmother or parents used to have, it still will exist to a certain extent. But I think to a big extent we will keep our values with our banks, and that is the next 5 years, I would say. In very, very basic stuff, that banks can accept it, can keep it, and if you want to have it again, that they can send it to you, But then all the compliance is in place, because a bank needs to know who you are when they send it to you,
Yes.
They cannot just send it to a random wallet, and all of that needs to be in place. And once that system is in place, we have, like in the B2C market, we have in the B2B market, the wallet's in place. And once the wallet is in place, then the general infrastructure is in place, and then everything else can thrive.
So thank you very much for all those insights. You've reignited the excitement that I experienced last year from talking to other organizations that are really working in the space. So it's been great meeting you, and thanks a lot for your time.
Thank you very much as well.